Welcome back to the channel, all of my SoFi stock investors. It is that time of the day to get into a SoFi stock update, and this is a good one because SoFi is up almost 12%. Now, why is this happening? I'm sure a lot of people are very curious to what happened today. And that's what we're going to talk about here in this video. It mainly revolves around the large option expiration day that we are seeing today, worth about $3.5 trillion. That is much more than the total value of something like Apple. This option expiration day is larger than about 98% of countries' total GDP. So it's a big day, and it'll let us move a lot more after this, but especially today you're first seeing the initial effects. So we're going to get into that, all of the other news that you guys need to know. So sit tight, hit the like button in the meantime, and subscribe to the channel. And if you guys have not already, get yourself those free stocks. Links down below in the description for Webull, Moomoo, and Public. Sign up for Moomoo, deposit $1, get 3 free stocks, as well as an additional free share of NEO upon your deposit clearing. So check that out if you guys have not already. It's virtually free money, and like I like to say, it's less than a Snickers bar to do so for that. So let's get into this. SoFi is currently up 11.89%. Very, very volatile. And I want to point out the obvious here. If you guys are unfamiliar with Ortex, this is a site that provides you in-depth analysis on any stock. This is a paid service. I believe it's about $700-800 per year if you pay one time for the year. If you don't, it's over $1,000 for the year. But you can somewhat rely on this data to be the most relevant on a day-to-day period. This is the live short interest data for SoFi stock, so telling us what is going on today. We can see the current short interest of free float is 19.42%. The current total of shares that is sold short is 140.08 million shares. But you'll see here return shares of 5.26 million. So that's the shares that have effectively been covered today, but you're seeing borrowed shares at 2.67 million. So you're seeing a net covering of 2.6 million shares. That is very small on the grand scope of 140 million shares that are sold short. So that is having a little bit of an impact today. The volume is roughly 50 million right now. We'll check the actual volume numbers once we get into the technical analysis, but it's not even a high ratio of volume. I think you're seeing a lot of people that are actually coming in and buying the stock, but we'll talk about that in 1 second when we get into the option flow sentiment. You are also seeing the cost to borrow max of 6.91% with a 100% share utilization. So the cost to borrow max has come down just a little bit. These numbers can move around a lot and they tend to change on a day-to-day basis, but the utilization has been at 100%. So that means nobody is willing to lend out their stock. Well, there is always stock to lend out. That's why you can get something like GameStop that is over 100% short. But by and large, it's pretty hard to get your hands on a stock to actually sell short. As far as the option flow sentiment, this is looking very bullish. 55% positive order value, 9 orders totaling $1.96 million. But if you look at the actual trades that are going through, 2 $10 April 14th calls, $8.50 call, $12.50 calls, $7.50 put, and then a couple puts right here, more calls down here, and a lot of this activity is actually on the call side for today. So you are probably seeing some level of the option activity that is pushing the stock up higher today as well. But I think this is only just the start of a potential rally that we might see due to this large option expiration day that we are seeing. And this is a quad witching day. So this is essentially when stock index futures, stock index options, stock options, and single stock futures expire simultaneously. And you can see that even back here in January, it says single stock options worth 1.2 trillion are set to expire. And this is talking about the March 18th expiration that we are seeing now. So ever since January 21st, when this article was posted, the notional value of these options has went insane to $3.5 trillion. And everybody's talking about brace for a massive quad witching. Usually these quad witching days are not too crazy, but usually it's not $3.5 trillion worth of options that are going to be expiring. So basically what happens with this quad witching is institutions, they'll buy options, they'll hedge out their portfolio, they'll do all that. So will you. And that all factors into the notional value here of 3.5 trillion, but your money's basically locked up until that expiration. So today you're seeing a lot of people actually getting assigned, right? So if people had sold puts on SoFi, they're likely getting assigned today to go out and buy the stock. And if they sold those at, $15 strikes or $10 strikes, they're being forced to buy the stock right now. So you're seeing a lot of money actually freeing up, and you're going to see this $3.5 trillion that can go back into the markets yet again after today, once we head into next week. So I think you're going to see a lot of bullish positioning heading into next week, and I think that is going to bode well for stocks like SoFi as well as a lot of other stocks that are beaten into the ground. It's more than the total market cap of Apple. It's larger than 98% of other countries' total GDPs. It's massive. And I think to, sit here and say that won't have an effect even next week and for the next couple of weeks would be just ignorant. I think this is going to have a lot of effect to the markets, and I think it will be skewed to the bullish side because the Fed gave us good reason to buy the dip right now and then sell in May and go away once they start to reduce the balance sheet. So I don't think the trend is just going to be straight to the moon. I don't think the markets are going to hit all-time highs again, but I think this is going to be a good bullish reaction throughout the next couple of weeks. We have about 6 weeks left until the next Fed meeting, and I really want you guys to pay attention to the Fed rate monitor tool. If you guys don't already, you could see that right here, this top line is pricing in the probability of a 0.5% rate hike to take the rates up to about 1% in May, and that's at about 41.7% to put the rates in between 0 and 0.75%. That's about 58.3% chance. So you're actually seeing this probability going up, but the markets are actually getting more bullish and they're not actually responding to that negativity as far as interest rates the markets are pricing in. So watch that. If this top number continues to go higher, definitely not going to be a great thing. But the markets, they're not caring about that all too much right now. Then again, we're still pricing in a 0.25% by and large with a 58.3% probability. So I'll pay attention to that. We do have 6 weeks until the next Fed meeting, so we could look forward to at least a couple weeks of bullishness. Overall, in my personal opinion, a lot of how the markets are going to move is obviously going to come down to Russia and Ukraine and how that situation does go. And really, over the weekends, on any given day, if you see a ceasefire, the end of fighting, or something along those lines, it doesn't look very likely right now. But if you do, for whatever reason, they come to an agreement, that is going to be a major, major catalyst, because the only thing the markets hate more than bad news is uncertainty, and adds a lot. On the lookout for that. That's the biggest thing that's really going to move the markets between now and the next Fed meeting, or even the CPI report, which does come out on April 12th at 8:30 a.m. So you still have less than a month from that, about 3 weeks until that does come out, and that will also be another market moving catalyst. As far as the max pain for next week is concerned, let's go ahead and pull this up. For next week, and that's gonna be March 25th, the max pain is $9 per share, so we're above that right now, approaching that $10 level, sitting at about $9.79 right now. That's going to be important to watch. We did see a little bit of resistance, it looks like, around $10. We're heading into the close of the day, so I want to see how that does pan out. But I think no matter what, it's a very bullish day today. I don't think we're gonna have that taken away from us, and I do ultimately think next week is going to be a very exciting one. If you guys are unaware of possibly what is causing a lot of this bullish activity, or potentially even some of this volume that is coming in, is Anthony Noto. Basically everybody is buying the dip on SoFi stock in huge numbers. It looks like today, or yesterday, Anthony Noto bought $303,000 worth of SoFi. The director, Ahmed, about $84,000. Anthony Noto, March 16th, bought $150,000. Anthony Noto, bought another $400,000, another $400,000 right there. Lots of buys right here. If you really zoom in on this, you could see just massive amounts of buys that are coming out, and that's certainly a very bullish thing, because the insiders of the company, they know best what is going on. They're actually the ones looking at the numbers. And when you see them buying the dips so hard under $10, I think that's a lot of justification for the markets to say, hey, maybe we shouldn't overlook this stock. Maybe the insiders are kind of sending us a message here and we should pay attention to. So all of those things are working for SoFi stock today. You also did see Biden and Xi Jinping. They did speak today. Nothing too crazy came out of that. They did say that they both countries, China, the United States, need to do more to try to solve this crisis going on in Europe with Russia and Ukraine. They also did say they want to try to strengthen ties between the two. And that was really the big thing there, that, try to de-escalate the situation using the influences they have. But on top of that, there was a leak that came out today that says that China is planning to invade Taiwan in the fall of this year. So obviously, if that's true, the markets probably are not going to react to that right now because it's so far away. But here, if we start to see intelligence reports, like what I was saying, between Russia and Ukraine over the past couple of weeks before the invasion, if that stuff starts to come out again, then you definitely want to pay attention to that, and the markets are probably going to freak out. And it says right here, China planned Taiwan invasion in fall, alleged Russian intel leak claim. So who knows? Just a rumor right there, but it is possible nonetheless. As far as SoFi, the moves that I made today, I did not buy any additional shares, but I do have these 5 options that I've held, and I've been very transparent, my plans and what I plan to do here. I bought them for $32 a piece, bought 5 of them. I sold 2 of them for $76, bought the 5 for $160, so I pretty much made it free, only about $8. If these contracts went to zero, I would only lose $8 at this point. So it's pretty much free and sitting on a market value of about $237. I plan to roll this straight back into SoFi stock, and it's looking pretty good. I might sell some out before the end of close here in the next couple of minutes. Not quite sure. Might just let them ride. $10 looks like a very key level. If we break above 10, we could go straight to 12. But also at the same time, I wanted to take advantage of this move to the upside. And I did sell SoFi $15 calls. I sold 5 of them for July 15th at $15 a piece. I really don't think you're going to see a sustained rally in the markets, especially when the Fed comes out and possibly gives us a 0.5% rate hike or the war in Ukraine does escalate. I think it's going to be a nice short-term rally, like I said in the beginning of this video. But I do think the markets will come back down, especially once earnings start to come out for stocks like Apple, Microsoft, all of your large cap stocks, and those earnings are not as good as investors expect. You're going to see the markets take a turn to the downside. So I wanted to collect some premium on this move to the upside, and I wanted to go far out the money, so I'm not willing to hopefully I'm not forced to sell my shares. But if you're ever implementing this strategy, you always want to make sure it's at least that you're selling calls that are at least higher than the price you paid for the stock, because ultimately you don't want to sell your stock. That's not the goal here. If you don't want to. I don't want to sell my stock. If I did have to sell my stock, I would rebuy back. But nonetheless, my break even would be about $15.48 per share. So this is not a directionally bullish trade because I am selling calls, but I don't think it's going to go to 15 or above and maintain that level by July. My long-term thesis is earnings will have to come down relative to 2021, comparing to 2022 numbers, and the markets are not going to like that, right? So that's basically the thesis there. And that's the trades that I do have. As far as everything else, I think it's a good time to take some premium. I don't want to sell any stock, but I think it's a good time to sell some calls if you have not on these really big green days. Nonetheless, if you guys have not seen SoFi stock, they just get a downgrade from Morgan Stanley, overweight to equal weight, and it's comical at this point. Insiders buying. A lot of people, like every article you see is pretty much bullish on SoFi stock, and the ones that are bearish are being proven wrong all the time. Every single time they post a bearish article, they're proven wrong. They're proven wrong. So these guys that like to downgrade the stock, it's so fraudulent. They put on short positions, put on these downgrades, and try to make money by doing that. Sometimes they'll even downgrade the stock and then upgrade the stock right after. See, Morgan Stanley to overweight back here March 3rd, and then March 16th, overweight to equal weight again. I could rant on and on and on about that, but I think you guys get the concept here of what is going on. Watch that $10 level to see if we do break above that in after hours trading right here. If we do, that's going to be a very, very good thing. If we can't quite break out above that, it might turn into another level of resistance, but I do expect on Monday to see that bullish reaction unless something crazy does come out from Russia and Ukraine. That's going to dominate headlines, so be watchful for that. After we do break out above that, and we are sitting on our 20-day simple moving average right now, we're finding a lot of resistance at 990. That's the level. That's where we're at right now. So we need to break out above that level and $10. After that, the 50-day moving average is at $11.63 per share, and then $14 will be clear to hit that if we can break out above 10. And then that 50-day moving average at 1163. So that is going to be all for this video. Hit that like button, subscribe to the channel if you guys want to stay up to date with all of this information. If you guys also want to support the channel, links down below in the description to do so for that one. You guys enjoy the rest of your weekend. I'm sure I'll have plenty of videos over the weekend. There's going to be a lot to talk about, a lot to keep you guys up to date on. So if you guys want to be a part of it, subscribe to the channel and turn on the notification bell. Like I said, thanks for watching, and I will see you in the next one.